Friends, can you hear me now? Wait. Friends, can you hear me now? Excellent. Just tell me if the audio is very much comfortable. Should I increase the volume or decrease the volume? It's comfortable. Good evening, everyone. Coming live after a very long time. I had face-to-face marathons going on in Kochi, Chennai, so I couldn't come live for a very long time. But now I am back here and I will be with all of you till the examination so that you win, and only when you will win, I will also win. I am not taking much of your time. April is a very crucial month, friends. So let's not waste any further time. If you want me to make any adjustments either in the audio or the video, please let me know, or else we can positively start off with today's session on SCMPE decision making concepts. So friends, first let me explain to you the ideology of this SCMPE success series. We are trying to revise every chapter in a limited duration of 1 hour. Maybe the small chapters will be done in a shorter duration, longer ones will be done at a longer duration. Okay, but on an average per chapter is going to be covered in a short span of 1 hour, so that one day before the exam you will be able to revise really well, and when your revision becomes good, automatically you will start scoring amazing marks in the examination. All right, Jayatidas, you want me to upload the marathon? Jayatidas, all the marathons are uploaded. We have very crucial contents. Just do one thing, just click on tarunjagdish.com/app. Just register here. You will get a call from my team and they will explain to you all the marathon sessions that are uploaded free. It can be SFM marathon, SCMPE marathon, case study digest is there, study material problem solving is there, revising SFM in just 10 hours is there. Very important crucial concepts are available. You can just log into this app. All right, Apurva, this is going to be a concept driven session. 1 hour I will explain the logic of all the concepts, so that once the concepts are clear to you, problem solving can get very easy. I will be coming live again with an RTP and MTP revision. During those times, all the concepts learned here will be applied also. All right, please let me know if you have any other doubts, or else we can positively start off with today's session. All right, so let's start off with first decision making chapter concepts. Okay, friends, overview of this chapter goes like follows. Point number 1, we have to learn about CVP analysis. Point number 2, we have to learn about activity based CVP analysis. Yes, Apurva, all these live sessions will be available even after the the live gets over. Because I have already taken many live, just check my YouTube channel. There is a lot of important content, so I request all of you, please subscribe to my YouTube channel. Many important live contents are available. Not only that, I am going to come live with many more interesting announcements. So just stay till the end of this session, and at the end of the session, I will be letting you know about many important upcoming events in which you all can be a part of. All right. Yes. So the second part is activity based CVP analysis. The third one is what we call it as costing of a service sector. Point number 4 is in-house versus outsourcing decision. Point number 5 will be sell or further process. Point number 6 is going to be product mix decision. Now this will be followed by relevant cost, And the last one is what I will call it as irrelevant cost. Quickly note down all these points, friends. In just 30 seconds, I'm going to the next slide where I will explain to you each of these concepts one by one. If we learn all these 8 concepts properly, conceptually this chapter is thoroughly completed. Then all that we have to do is do some problem solving. That also, friends, once I complete this chapter, I will tell you the list of important questions which you should work out so that in minimum time you can get maximum coverage. Done. Let's go to the next part now. CVP analysis. This is a very basic part, friends. You have already learned about marginal costing. Am I right? So what is the format of marginal costing? You start with sales, followed by variable cost, again followed by contribution, followed by fixed cost, and followed by profit. So let us say your company has a sales of 100 lakhs, variable cost is 60 lakhs, you get a contribution of 40 lakhs, 30 lakh is your fixed cost, your profit will turn out to be 10 lakhs. Here we will revise very quickly. Hold on. You want me to adjust the top part? Swapna, that's visible is what I believe. Anybody else facing that issue? Please let me know. Okay, I believe it is very much clear now, Swapna. Please confirm. Alright. So let us start with the very basics of decision making. Point number 1, PV ratio. Everyone tell me, what is the formula for PV ratio? It is contribution divided by sales. So here it will turn out to be 40 divided by 100, or that is equal to how much percentage? 40%. Or it means for every 100 rupees of sales that you do, 40 rupees is what you get in your hands. Every time I make a sale of 100 rupees, 60 rupees will go from my hands. What I will only have with me will be 40 rupees. I hope everybody is clear with the concept of PV ratio. Followed by the next important concept, break-even point. That is fixed cost divided by PV ratio. So here the fixed cost is 30 lakh and the PV ratio is 40%. So do I get the answer as 75 lakhs? What is the logic of this 75 lakh, friends? It means if I sell for 75 lakhs, my profit is turning out to be 0. If I sell above 75 lakhs, I will make profit. If I sell below 75 lakhs, I will make a loss. Are you all clear with this point also, my dear friends? Yes. Next concept is called as margin of safety. So the formula for that is profit divided by PV ratio. Or in other words, here we have a profit of 10 lakhs and the PV ratio is 40%. So we get the answer as 25 lakhs. The logic is very clear. Everyone interact with me. How much is your actual sales over here? Actual sales is 100 lakhs. How much is your break-even sales over here? Break-even sales is 75 lakh. Actual sales 100, break-even sales 75. How much is your excess sales over and above the break-even point? 25 lakhs. That means because of this extra sale of 25 lakhs, you are actually making profit. I can prove it to you in a different way now, friends. I'll take a fresh page. What is my total sale? 100 lakh. In this 100 lakh, I'll break it up into 2 parts. Part 1, 75. Part 2, 25. What is my PV ratio? It turns out to be 40%. 40%. So now tell me how much is 75 lakh into 40%. If I'm not wrong, you get the answer as 30 lakhs. So I'll give that over here as contribution. Whereas 25 lakh into 40% is equal to how much? 10 lakhs. Now everyone interact with me. How much is the contribution for the 75 lakh? 30. How much is my fixed cost? 30. So what is my profit over here? 0. That is the reason we call it as what? We call it as the break-even point. What about the extra 10 lakhs? For this extra 10 lakhs, is there any extra fixed cost coming? The answer is no. There is no more fixed cost coming. Hence, this entire 10 lakhs will turn out to be their additional profit. Are you all clear with this point, my dear friends? I'll give you a minute's time. Quickly write down. Then we go to the next concept. I believe you are done with this part also. Let me now go to the next part. CVP analysis. Friends, if you have any doubts, you can send me a chat and I will definitely reply to that. Okay. CVP analysis in the ABC environment. Activity based costing. Friends, I believe you have already learned activity based costing in your inter level also, and in the final level the same concept is coming in two areas. One is strategic analysis of operating income. I have already covered the revision of that chapter. You can just view the previous videos. All right. Part 2, we are learning it now over here. What this says is, I'll first give you the conceptual clarity. Let us assume this is a factory. In this factory, you basically have four areas. The first area is called as a store. Second area is setup. Third area is inspection. And the fourth area is what? The fourth area is dispatch. I repeat, store, setup, inspection, and the last part is dispatch. Here in store, you will be paying this person a salary of, let us say, 10,000 rupees. Now tell me, my dear friends, this 10,000 rupees, is it fixed cost or variable cost? Normally, your first answer will be that this 10,000 rupees is a fixed cost. Your answer is right. But what is the main activity the store manager is doing? His main activity is to get the store order, or I call it as a store requisition. Every time the raw material in the store comes down, that point he has to place a new order to replace it. Am I right? So here the main activity is number of store requests. If you have more requests from, let us say, two products, product A, product B, if you have more requests from product A, then ideally the cost should go to product A. If you have more requests for product B, then it should go to product number B. Okay, setup. What do you mean by setting up, friends? It means you have to make the machine ready. You have to make the machine ready. So you set up the machine. So for example, if you're talking about a food item, that is always the best way to explain activity based costing. Let us say you are in the kitchen and you want to make two things. One, you want to make a dosa. Two, you want to make vadas. All right. Dosa, you make it on the tawa. So you have to heat the tawa for, let us say, 5 minutes. How do you make vada? You have to heat the oil. You may have to heat the oil for 10 minutes. So the setup time for vada will be 10 rupees. And the setup time for dosas will be 5 minutes. That is what we call it as the setup time. So here, based on the number of setups, we actually decide what is going to be the cost that is involved over there. Inspection is found out based on number of inspections. The more you inspect, the more cost will be incurred for it. So for example, if I'm inspecting more number of dosas, I have to pay more money for dosa. If I inspect more number of vadas, I have to spend more time on the vada. I hope you are clear with that. Last one is dispatch, and that is called as number of dispatch. Friends, this is what we call it as activity cost driver, whereas this is what we call it as cost pool. Everyone repeat with me. The first thing is called as what? Cost pool. Second thing is called as what? cost driver. Now, when you take the cost pool, let us say the cost pool is 10,000 rupees everywhere. And now let us say we are having around 1000 store request. So if I have 1000 store requests, my total store cost is how much? 10,000. What is 10,000 divided by 1000? It turns out to be 10 rupee per store request. So every store request that I place, I have to pay how much money from my hands? I have to pay 10 rupees from my hands. This is the concept of activity based costing. Ideally, there are 4 steps involved. Step number 1 is called as the cost pool. Step number 2 is called as the cost driver, ABC rate, and the final one is what? Apportionment. I'll give you a minute's time. Quickly write this down. Then I go to the next slide. I hope everything is comfortable for all of you friends. Any doubts you get, you can message me right here. Any areas you want my support, just let me know. Okay. All right. I'm going to the next page now. Right. So now, normally what is the formula for break-even point that we have learnt earlier? What was the formula? Fixed cost divided by either contribution per unit or fixed cost divided by PV ratio. Friends, when you come to activity driven cost, now here store, whether it is a fixed cost or a variable cost, under the concept of activity based costing, the store cost is neither variable nor fixed. It becomes an activity driven cost. So under decision making, in order to avoid this confusion, they treat all these costs as fixed costs. I repeat, under activity based costing, for the purpose of decision making, they treat all these costs as what? Fixed costs. So what they do is, fixed costs, they will add the ABC cost. Or let me give you the formula below in detail. The formula for BEP is equal to fixed cost plus number of store request into store request per product, or what do you call it, as store request per ABC, or per cost per store request. Let me put it that way, into cost per store request plus number of setups into cost per setup plus inspection. All together you take whole divided by contribution per unit. So using this formula, they find out the break-even point. Can you please write down this, and once you are done, let me know. I will go to the next slide. Friends, I hope the screen is visible to all of you. And I hope everything is comfortable. All right. Can I go to the next slide now? So we are done with concept number 2, that is activity based costing. Now the third thing is called as costing of service sector. Okay. Now costing of service sector. Let us do this part now. In order to explain this, I need to first take a very simple example. Let us take 3 people from this classroom. Whom should I take? I will take Shruti Satyan. Shruti will be first person. Let me take another person as Anima. And let us take the third person as Loganathan. Okay, we will take 3 people. In my example, let us assume that Shruti is a taxi driver. What she will do is, She will first go and pick up Anima from a particular location. Let us assume that we are all in Bangalore. Okay, I am not very familiar with other places. I know a few places, so I'll take Bangalore over here. So let us assume Anima is staying somewhere near Jayanagar. And let us assume Lokanathan is staying somewhere near Banshankari. Alright. So what Shruti is going to do is she is going to provide taxi service to Anima and Lokanathan. So Shruti will first go pick up Anima and let us say that is 5 kilometers away. And Anima to Lokanathan is, let us say, 2 kilometers away. I think Banshankari and Jayanagar are very nearby is what I presume. So morning she will go pick Anima, then pick Lokanathan, and after picking both of them, she will drop them at the office. Alright. And then in the evening, pick them up both, drop Anima back to her place, that is which is 5 kilometers away, and drop Lokanathan back to Banshankari. Alright. So now tell me friends, from Anima's point of view, how many kilometers is she traveling per day? Into how many days? So 25 days into 10 kilometers is what we will call it as 250 passenger kilometers. Whereas what about Lokanathan friends? How many kilometers is he traveling every day? 7 into 2? He is traveling for 14 kilometers into how many days? 25 days. So everyone tell me how much is 14 into 25? That would be 350 passenger kilometer. If you add up these two together, 250 plus 350, do you get the answer as 600 passenger kilometer? Am I right? So friends, total passenger kilometer is a new concept. Now, in order to do this driving, let us say Shruti is incurring some cost. What are the costs that Shruti will incur in case of a taxi service? One will be petrol. Two will be maintenance. Am I right? Three will be, let us say, repairs and maintenance, petrol, driver's salary. And what will be the fourth one? Depreciation. How will you work out the petrol cost now? Over here, it is said to be total how many kilometers she is traveling every day? 7 into 2, 14. 14 kilometers per day into 25 days. Am I right? So how much is 14 kilometer into 25? Do you get the answer as 350 kilometer? Let us assume the vehicle is giving you a mileage of 10 kilometer divided by 10 multiplied by the petrol cost. So let's say the petrol cost is 100 rupees per liter. So how much is the cost coming over here? 3,500. Let us say maintenance is 1,500, driver's salary is 5,000 and depreciation turns out to be another 5,000. Now tell me, what is the total cost of Shruti? That turns out to be 15,000. Now tell me, what is the total passenger kilometer traveled? You get 600 passenger kilometer. 15,000 divided by 600. 25 rupees per passenger per kilometer is the cost. Add, let us say 5 rupees profit per person per kilometer. How much money are they going to charge? They are going to charge 30 rupees per passenger per kilometer. This concept is what in the inter level you call it as operating costing, and at the final level you call it as costing of the service sector. Are you all clear, my dear friends? Come on, write down this in your books. I'll give you a minute's time. Yes, insurance will also come. All right, friends, can I go to the next part now? Yes. So we are done with passenger kilometers also. Next question is about ethics in decision making. Friends, this is a very crucial area which is not only coming in decision making, but when you compare the old syllabus AMA versus the new syllabus SCMPE, they are talking about ethics in multiple places, because making profit is one part, but if you are unable to maintain your ethics, there is no way in your personal life or in your professional life you can ever grow. I will give you a classic example which was given in your case study. It is about a footwear company. Now, this is a practical case that even I have experienced myself. Tell me, friends, how do you make a footwear? You have a sole, and this is called as the upper. This one is called as the sole. All right. Normally, sole is manufactured in a machinery. So you have machinery where you put a liquid called as isopolyol. The moment you put the liquid, automatically it will get, it will be all heated, put it there, cool down, it will come as a sole. But upper is normally handmade. So friends, when you make an upper, you actually have two options. Okay, one, you can keep own employees and you can do it. Option two, you can subcontract. When you keep your own employees, all the big footwear companies have to comply with the laws such as Payment of Bonus Act, etc., etc. Am I right? So when you talk about all those things, here PF will come, ESI will come, bonus will come. All these things comes in, automatically what will happen, friends? The cost will go up. So many footwear companies go for subcontracting. And when they give for subcontracting, the subcontractors, in order to reduce their cost, they resort to child labor. Now tell me, from ethics point of view, this footwear company giving a subcontract to another person who is putting child labor on work, is that ethical or unethical? It is absolutely unethical. That is what they are trying to show over here. So when you do business, please do business with ethics. And you have some beautiful illustrations in your book about footwear company, about hospitals. One hospital, they have told that if you give medicine for lesser number of days, the patient will fall sick and come back again. Revenue will go up. But is that the real objective of a hospital? No. The real objective of hospital is what? To maintain ethics and to release the patient in such a way that they should never come back to us. Can you quickly write down this in your books now? चिराग 40 to 50 का रास्ता ही बता रहा हूं यहां पे. अभी हम क्या कर रहे हैं, हम पूरा कॉन्सेप्ट्स लर्न कर रहे हैं. एक बार कॉन्सेप्ट्स पूरी तरह से सीख जाएंगे, उसके बाद आपको मैं बहुत सारे फ्री क्लासेस प्रोवाइड करने वाला हूं. जस्ट स्टिक टू द एंड ऑफ द क्लास, आई विल अनाउंस मेनी इंपॉर्टेंट सेशंस. तो आप एक बार वो भी पढ़ लोगे तो डेफिनेटली 40 to 50 इजीली यू कैन स्कोर फ्रॉम द एग्जाम पर्सपेक्टिव. मेन थिंग क्या है चिराग? कॉन्सेप्ट्स क्लियर होना चाहिए, थियोरी आना चाहिए और केस स्टडीज पढ़ना चाहिए. अगर आप ये तीनों चीज बराबर से कर रहे हो सो डेफिनेटली 40 to 50 स्कोर करना बड़ी बात नहीं है. कैन आई गो टू द नेक्स्ट पेज फ्रेंड्स? Yes. So that's all about ethics in decision making, friends. Let's go to the next one, that is called as outsourcing decision. Outsourcing decision. All right, friends. Now let's take a very simple product. Let me take one other person from this class. Let us talk about Chirag. So Chirag is planning to make something at home which he can sell outside. Chirag, आप क्या बनाना चाहते हो? Let us take samosas. Okay, so Chirag is having two options. Either he can make samosas in-house or he can outsource. If Chirag is going to make it in-house, he will need a fixed staff. So there will be a staff salary. Let us assume the staff salary is 20,000 rupees per month. Apart from that, he will have variable cost also. Every time he has to make samosas, he needs potato, he needs the maida, etc. etc. Let us say that is 10 rupee per samosa. If he goes for outsourcing, his staff will not be required, your salary cost will become zero. But what will happen? Purchase cost will be more. Let us say it turns out to be 25 rupees per samosa. Now my question to you is he supposed to go for subcontracting or is he supposed to go for in-house? Friends, we cannot answer like this. For this, we have to find out something called as the indifference point. The formula for indifference point is change in fixed cost divided by change in variable cost per unit. Or in other words, it will be 20,000 divided by 25 minus 10. So tell me friends, how much is 20,000 divided by 15? Do I get the answer as 1,333 units? What this logic means is that if I make exactly 1,333 units, I can either go for subcontract or I can go for in-house. Anything less, anything more. Anything less than 1,333, it is better to go for subcontract. Anything more, it is better to go for in-house. I can prove this to you with three numbers. Let us take 1,000 samosas here, 1,333 samosas here, 2,000 samosas here. So when I take 1,000, I can either go for in-house or I can go for subcontract. If I go for in-house, I will end up paying 20,000 plus 10 into 1,000. Am I right? So what is the answer you get over here? 30,000. But if I go for subcontract, it will be 1,000 into 25. I end up paying only how much money over here? 25,000. Now tell me, my dear friends, which is better? 10,000, 30,000 or 25,000? 25,000 is definitely better. Now let us come to this part. If I go in-house here, it will be 20,000 plus 2,000 into 10. So will I get the total answer as 40,000? Whereas if I go for outsource, I will turn out to be 50,000. Now tell me, my dear friends, which is better? This one is better. Can you quickly write down this in your books now? Alright, please write down this now. Friends, being an online session, I am not giving you much time, but all these notes will be available in my Telegram channel. Okay, so just go and subscribe to my Telegram channel. Go and just search for Tarun Jagdish. It will come there. Alright, and I am going to upload these notes there immediately after my YouTube class gets over. I believe you are done with this part also, friends. I'll go to the next one now. Next heading is sell or further process. Okay, friends, I will explain this again with the help of the example of dosas. What to do, friends? I am a very big fan of dosa. So all the costing concepts, they look familiar to me with the help of dosas only. Now tell me, my dear friends, what is the raw material required to make dosas? It is made with rice. Am I right? So let us say I get 100 kg of rice. With this rice, I make, let us assume, 1000 dosas. So this is point is what we call it as the split off point. At this point, I am having how many dosas with me? 1000 dosas with me. Then what I will do is, from here, I can convert, if I add potato, it will become a masala dosa. If I add onion, it will become onion dosa. Everybody clear with this part? So let us say I can make 100 masala dosa or 100 onion dosa. Sorry, 1000 is there, right? 500 masala dosa, 500 onion dosa. What is the selling price of masala dosa? Let us say it is 50. Onion dosa, let us say it is 70. So here I will get 35,000. Here I will get 25,000. Alright. Let us say the extra potato cost is 5,000 and the extra onion cost is, let us say, 20,000. Okay. At split off point, I have 500 dosas here and here also I am having 500 dosas. So every dosa I believe can be sold at 30. So I will get 15,000 over here. Here also into 30. I will get how much? Now my dear friends, interact with me. Which is better? Is it better to sell dosa and masala dosa, or is it better to sell onion dosa or normal dosa? Here how much is the price? 15. Here it is how much? 25. What is the extra revenue I am getting for masala dosa? 10,000. What is the extra cost for this particular thing? 5,000. Extra revenue 10. Extra cost 5. So my net benefit turns out to be plus 5,000. So what is better? Masala dosa or dosa? Masala dosa is better. Down. Everyone tell me what is the final sale value? 35,000. What is the intermediate sale value? 15,000. What is the extra revenue? 20. What is the extra cost? Oh, it's exactly 20, is it? So your net profit becomes 0. What this means is that you can either make onion dosa or you can make ordinary dosa. This is what we call it as sell either at split off point or sell after further processing. Swapna, unfortunately, I did not have dosa for dinner. Please write down. Are you all done, friends? Right, let's go to the next part now. Write down the next part. Product mix decision. Fine, friends. Let me explain this to you now. We'll take some other example now, friends. Particulars. Let us talk about burger and let us talk about pizza. Now, how much is the selling price of a burger? Let us say it is 300. Pizza, let us say it is 700. Sorry, not 70. $700. All right. Variable cost for burger is, let us say, 100. For pizza is, let us say, 400. Are you all hungry, my dear friends? Anima, dosa helped you a lot to understand Forex. This time in the face-to-face class, it was chicken biryani. But I was missing dosa very much. Alright, the contribution turns out to be 200 here and 300 here. Now, it is 200 rupees contribution for a burger 300 rupees contribution for a pizza. Let us say the time taken to make a burger is 30 minutes and the time taken to make a pizza is 60 minutes, or in other words, let me put it in hours. Let me call it as 0.50 hours, and here I will call it as 1 hour. Now my point is, if I put it this way, I can find out the contribution per hour, or the formula would be C divided by D. So do I get the answer as 400 rupees per hour? And here it will be 300 rupees per hour. So tell me, when I take the ranking, which product is better? Rank 1, rank 2. Or the logic goes like this: for every one burger that I make, I will earn a contribution of 400 rupees, and for every one pizza I make, I will get a contribution of 300 rupees. So which one should I make first? I should make burger first. Now let us assume we have a demand of, let me just check, 1 minute. Okay, we have a demand of 10 burger plus 5 pizzas. If that is the case, everyone tell me what is the total hours available. That I need to just give you a number. Let us say I'll write down the total hours required. That will be 10 into 0.5, 5 into 1. Do I get the answer as 10 hours? So 10 hours are required to make this, but let us assume only 8 hours are available. If that is the case, first what will you make in this 8 hours? Will you make burger or will you make pizza? You will first make burger, only then you will go and make pizza. So when you make burger, you will end up spending how much money over there, how much time over there? 5 hours. What is the remaining time available with you? That is only 3 hours. In this 3 hours, how many pizzas will you make? This is what we call it as product mix decision. We have to decide which product to produce based on the time availability. This time shortage is what we call it as the key factor. Can you write down this in your books? Please write down this now. Alright, so friends, we are done with the concept of product mix decision also. Now we go to the next part. What is a relevant cost and what are irrelevant cost? Are you ready, friends? Let us start with the example of material. So we'll write down concept number 1, relevant cost of material. Okay, particulars. There are normally 3 types of cost. First one is called as original cost, that is the cost when you purchased it. Second one is called as the replacement cost, and the last one is what I call it as realizable value or the scrap value. Alright, let us talk about 3 fruits now. Tell me, my dear friends, which are your 3 favorite foods? Shall we talk about mango? Shall we talk about pineapple? And shall we talk about banana? Alright, let us assume the nature of mango is fast moving, very, very quick. Whereas the nature of pineapple is, let us say, non-moving. Banana to be purchased. So let us say we put some numbers. The original cost of mango was, let us say, 50. If I replace, it will be nice 70 and scrap value is 1 rupee. Pineapple non-moving, original cost was, let us say, 40. Replacement cost is not available because it's anyways non-moving and the scrap value is 2 rupees. Banana to be purchased, so only the replacement cost of 10 rupees is available. Scrap value is, let us say, 3 rupees. Now tell me, first product, mango. Mango is what? Fast moving product. So friends, if it is a fast moving product, the relevant cost will be the replacement cost, because the moment I sell a mango, I have to go and purchase another mango and replace my existing stock. Why? Because it is running at high demand. Now let us talk about the other one. Second one is pineapple. Pineapple is non-moving, dead stock. Only option available with me is what? Sell it as scrap. So here what is relevant? The scrap value is relevant. Banana to be purchased. So what is the relevant cost? Again, replacement cost. So the concept goes like this. If the product is fast moving, the relevant cost is replacement cost. If the product is not moving, relevant cost is scrap value. If the product is to be purchased, the relevant cost is replacement cost. Original cost is not relevant. Why? Because it is a historical cost, and historical cost is not relevant for decision making. Are you clear with this part? Please write down. Anima, you wanted apple? Swapna, you too? Friends, I hope the audio is perfectly comfortable, right? Okay, let me go to the next part now. Part 2. Relevant cost of labor. All right, everyone interact with me. Part 1, we will talk about skilled labor. Let me take a skilled labor over here. Let us assume Swapna is a wonderful cook and she makes wonderful masala dosas. All right, now she is a highly skilled labor. There is a restaurant called as Swapna's Dosa Counter. In this counter, people just come to buy her dosas. High demand. Every minute there is one fellow coming there to buy a dosa. And let's say it takes her 5 minutes to make a masala dosa. That is when in her shop, let us say the selling price of a masala dosa is 50. Variable cost including her salary is 30. And the contribution is 20 rupees. Alright. And let us say Swapna is paid 5 rupees per dosa. Okay, 5 minutes, 5 rupees per dosa. Now suddenly in this shop, Anima is coming. Anima does not want dosa. Anima wants vada. She will tell to Swapna, please make me a vada. Let us assume to make vada, it takes how much minutes? It takes her 10 minutes. Friends, in this 10 minutes, how many dosas Swapna could have made? She could have made 2 dosas. Now she is going to lose contribution on 2 dosas. So the relevant cost of Swapna over here will turn out to be, one is the variable cost. She takes 5 rupee per dosa. That is 5 rupee per 5 minutes. So for 10 minutes, her variable cost will be how much? 10 rupee plus contribution foregone. Here, how many masala dosas she will miss by doing so? 2. So it will be 40 rupees. So what is the total relevant cost over here? 50 rupees. If she is selling a vada for 20 rupees, relevant cost is 50. Is it advisable to make vada? The answer is no. Swapna will tell to Anima, Anima, get lost. I will only make masala dosa because that is where I am actually making profit. But friends, again, ethical consideration. I told you earlier, everything cannot be measured in money. Non-financial consideration, goodwill is important. If she tells like that to Anima, Anima, you get lost, I get better profit in masala dosa. Anima, will she refer any other customer to Swapna? The answer is no. Everybody clear? But from a pure financial point of view, the relevant cost will be the variable cost plus contribution foregone. RC, relevant cost, is equal to variable cost plus contribution foregone. Can you write down this now in your books? Done, friends. Now let me go to the next concept. Roman number 2. Relevant cost of unskilled labor. Tell me, my dear friends, tell me a person's name who wants to do articleship under CA Tarun Jagdish. Let me take one person from this classroom now. Vijay Lakshmi. Let us assume Vijay Lakshmi is coming to Tarun Jagdish and Associates and she is doing articleship. How much stipend will Tarun Jagdish pay to Vijay Lakshmi? Let us say Tarun is paying as per ICAI rules. How much is the stipend as per ICAI rules? Let us assume it is 5,000 rupees per month. But after joining for articleship, Vijay Lakshmi realized Tarun Jagdish is having no work at all. He is sitting simply, he is sitting jobless, full day in the office. Vijay Lakshmi is just sitting there and checking her Instagram, checking all the reels that are available in Instagram and passing her time. That is when Tarun got a new accounting work. The client told to Tarun that he will pay to Tarun 3,000 rupees per month, but the client needs somebody full time available at the client's place. Now tell me, my dear friends, how much revenue the new client is giving to Tarun Jagdish? 3,000. What is the stipend of Vijay Lakshmi? 5,000. So should Tarun accept this work? Yes or no? The answer is Tarun will accept the work, because if he does not take this work, he will not even get the 3,000, but 5,000 he definitely has to pay, because this 5,000 is what we call it as the committed cost. Are you all clear with this part, friends? It is called as committed cost. So extra revenue is 3,000, extra cost is 0. The net benefit will turn out to be 3,000. So the relevant cost of unskilled labor or committed cost will turn out to be 0. Can you write down this in your books now? Perfect, friends. So we are done with this part also. Now we go to the final part of relevant costing. What all are relevant cost and what all are irrelevant cost? Okay. All the relevant costs are opportunity cost. Other one, differential fixed cost, variable cost, out of pocket cost. What are the irrelevant costs, friends? First one, committed cost. Second one is called as absorbed fixed cost. And the third one is called as what? Historical cost. Shall we start learning these points, friends? Now, first one, opportunity cost. Friends, you suddenly get an invitation to your friend's marriage. But the only problem is, two of your friends are getting married. Both are getting married on the same day, same time. Now tell me, whose marriage will you go? Now you know both are equally important to you. And going to one fellow, you will end up losing the other fellow. Only way to decide is what food you are getting over there. So tell me, friends, suppose friend number A is providing sadhya for lunch, meals for lunch, and the second fellow is offering chicken biryani for lunch. Assuming that you are all non-vegetarians and you have no problem in eating veg or non-veg, tell me, my dear friends, which friend will you prefer? Friend A or friend B? Normally, if you are a chicken biryani lover, you will go for friend number B. The moment you go for friend number B, you lose friend number A. A becomes an opportunity cost, or opportunity cost is nothing but it is the cost of the next best foregone alternative. Everybody clear? Let us go to the second one called as differential fixed cost. What is this? This is classroom. Okay, this classroom has got a strength of 50 students and we are paying a rent of, let us say, 50,000. Alright, now everyone interact with me. Suppose 55 students came. There is no place over here. So what they did was they took this extra space on rent. For this, additional rent was, let us say, 5,000 rupees. This extra 5,000 is not a fixed cost. It is what we call it as additional fixed cost, or in other words, differential fixed cost. Now tell me, this extra fixed cost, is it relevant or not relevant? It is absolutely relevant for decision making. Are you all clear with this part also, friends? Let's go to the next part now. The variable cost. That's already obvious. All variable costs are relevant costs. Out of pocket cost, any money you take from your pocket, all of them are relevant cost. Committed cost, we already talked about article. Okay, this is not relevant. Absorbed fixed cost. That is not relevant because fixed cost by itself is what? It is a committed cost. What do you mean by historical cost? Friends, you spend lot of money for your CPT. You spend lot of money for your IPCC. You spend lot of money for your final. Finally, you become a chartered accountant. Then you go for job interview. There you realize nobody is giving you job. Can you go and tell to ICI, please refund my money back so that because I did not get any job? You cannot do that. What will ICI tell to you? It will tell to you that all the money is gone. Historical cost, not relevant for decision making. Can you write down this in your books, friends? Yes, Vijay Lakshmi, differential fixed cost and specific fixed cost are the same. Friends, we are done with decision making now. It took much longer than what was expected. Now I will tell you all the important questions that you are supposed to work out on your own. Yes, unattempted exams also, absolutely true. Alright friends, so I believe you are done with this. Okay, let's go and quickly now take the material and I'll tell you the important questions that you need to work out. This is the only one chapter where I will recommend doing some illustrations. They have some of the best illustrations possible, friends. I'll tell you which ones to work out, which ones are, moderately important. Illustration number, activity based costing. Just write it down, friends. One type, one question, okay? Illustration number 2, that is activity based CVP. Very important. Illustration 2, write it down. 3, illustration 3 is on what? On passenger kilometer. Only one question is there, you have to work it out. 3, illustration 3. This is the case study I just mentioned right now in the class. Illustration 4, ethics, hospital ethics. You have to work it out. One concept, one question, okay? Illustration 5, outsourcing decision. All these are important. I'm not simply saying everything, but please understand all relevant questions I'm sharing with you. 6, not required. 6 is not required. You have better questions on relevant costing. 7, you can work out. 7 is okay. It's a quick one. Small question, you can work it out. 7, let me come down. That's not required. Okay. 9 is a question on optimum mix along with LPP. Friends, LPP was learned earlier. Okay. It is a maximization problem. You have to draw graph, etc. So that part I have not covered over here because it's a very, very lengthy process and not very important from exam perspective also. Okay. It has never been tested in the new syllabus, only in the old syllabus. If you come down, I'll tell you which other question to work out. Question number 4, hotel based costing. Question number 4. Question number 6. Question number 6. 8. Question number 8. And 9. 9 Aditya Group. Beautiful question, friends. That's it. 10 not required. 10 not required. It came in an earlier RTP. 11 also is very basic. Friends, these questions what I mentioned to you, work out those questions. So in minimum time, you get all the conceptual coverage. See, if you have time, work out everything. I will not stop you. But when you have limited time, work out these questions so that limited questions, maximum marks are covered. I hope everybody is clear with this part, friends. Okay. So let's conquer SFM. Let's score the best marks in the upcoming exam. I will do one thing, friends. I have gone live on decision making now. It took more time than expected. Tomorrow we will do transfer pricing also. Okay. And friends, one very, very important announcement. Tomorrow morning, okay, I am going live with an SFM one-day marathon. So those of you who are writing group 2, not relevant to you. Group 1, it starts at 7 a.m. It will go on till 7 p.m. Every chapter will be covered, limited questions. All right. In case you want these lectures or you want to attend this Zoom link, please subscribe to my Telegram channel. I'll be putting the link today night within the next 30 minutes. All right. So you can just go to t.me/Tarun_Jagdish, or if you just search Tarun Jagdish, it will come on top, or you can also place tarunjagdish.com/Telegram. This is also one way how people do it. If you are still finding it difficult, you can WhatsApp me on my number. And friends, please install my app. If you are a person who is using Play Store, install my app, or you visit class.tarunjagdish.com. You have some very, very important concepts and content over there free of cost. Okay, you just have to install this. You will get a call from my team who will tell you how to use this. You just have to go to batches. Here you have SCMPE case study digest. Friends, this thing is almost 200 pages. It came in the last exam. I have covered this entire thing in 20 or 22 hours. That's all. Full case study digest is covered. So you can learn that quickly, and you can score better marks from the exam perspective. So just register here and you will get those contents available. So let's pack up our session with this, friends. I hope it was very much useful to all of you. All the very best. I'll see you tomorrow night. Thank you so much. Be in touch. Take care.